Okay, welcome back. 35 lower on the Nifty is what we have. Manisha is standing by with what's top of mind for commodities. Manisha, morning.
Morning. Well, thank you for that, Prashant. You've been talking gold and the metals have continued to decline. But there's one thing that seems to be slightly inching up right now, and there is some opportunity buying, and that is the crude oil prices. Well, after declining 9 to 10% in the previous week, we've started crude oil prices slightly on a positive note. And this is one, there was some opportunity buying. It was slightly oversold on charts as well, with 10% of decline on a week-on-week basis. But the prices are firm on a potential hurricane in Gulf Coast. Remember, 60% of U.S. refining happens in Gulf Coast, and there is a hurricane building up, which might see a landing around Wednesday or Thursday. So whether there are shutdowns ahead of that, evacuations, is something that the street will keep an eye on. Well, as I said, the Brent prices have declined by nearly 9% in the previous week. We saw WTI prices decline by 10%, and this has been the biggest weekly decline that the crude oil prices have seen in last 11 months. And with that, the Brent is now trading at the lowest since December 2021 and WTI at June 2023 lows as well. But the markets also have seen, or not reacted rather, to the OPEC and allies postponing their increase of 180,000 barrels per day since the month of December. The markets clearly did not react to this much. We saw 1% of gain, and that also went by the intraday markets ending itself. Now, OPEC and allies also have said with this that they can be looking at a longer pause. They can also look at a reverse if needed, as in they can cut more output as well. And then apart from that, when you look at the OPEC and allies spare capacity, that is a huge 5 million barrels per day. I mean, with that kind of a capacity, markets do believe that there is bearishness that can continue. I also want to take you through what we've done in sense of price range in this year until now. We did see a high of 91. We are trading at 71 right now for the Brent prices, and from 87 to 67 for WTI. That's a $20 of a decline that we have seen until now from the highs in sense of crude oil prices there. In the Asian markets also, the Chinese demand is not so strong, and the refining margins are at the lowest since 2020 as well. There also is increased production from Libya that has come back. The money managers, the latest CFTC data shows that their also net long positions have been closing down. I'll quickly take you to the last slate, which tells you on what is the forecast now coming in for the crude oil prices. Bank of America, for one, says that for the second half, they've lowered the forecast from $90 to $75 a barrel as an average. You also have Goldman Sachs, which also has revised the forecast by $5 on the lower side for this year and the next as well, to $80 a barrel there. Citi says that if you see demand destruction continuing like this and the supply coming in, there is a probability you could be looking at $60 a barrel for 2025 as well. Remember, we are trading at 71 already at this point in time, so that's $10 on the lower side. UBS is the only one that still continues to hold a bullish call on crude oil prices. They estimate that for this year now, 80 is where you could be averaging for the rest of the year.
All right, Manisha, thank you very much for that. Oil in focus. We shift the focus away from commodities, and we're going to take a quick break here now. So our